I have a special guest today, as always. This one is even more special because we worked together at one of the events. He was invited to one of our events at church, and he talked about this. He eats this for breakfast, I'm telling you. And you guys are going to
Pretty
learn a
much.
lot, especially if you're in Texas, if you're in San Antonio. You are going to learn a lot today from him. He's been in the mortgage industry for over 20 years. He has an extensive experience in both purchase and cash out loans in all possible loan programs like the VA, the VHA, and all the conventional programs. So the knowledge that he has in closing many years of loan has made it easier for him to find the best possible loans for you if you're looking to get a home here in San Antonio, I'm sure in Bernie, but mostly in Texas because I'm sure they work based on their license is based on the state, right? So anywhere in Texas, I'm sure he can definitely get you something if he needs to get you something. And something about him that's special. He enjoys getting out on his Harley Davidson, and we were just talking about it because of my headband, my bandana. So I was telling him, yeah, I'm definitely looking forward to getting learning how to ride and then get on it one day. For real, it's on my bucket list before I leave this earth. So yeah, he told me to come down to the dealership, Harley Davidson dealership, and he showed me around and see what's up. So I'm going to take him on that offer very soon. So, but yeah, without any further ado, I'd like you guys to welcome to the podcast, David Lindsey. Hey, David, thank you so much for joining us today. You're the man.
Hey, no
How are
problem,
you?
man. Thanks for having me. I look forward to seeing you at the Harley dealer next up,
Of course,
We'll
of
teach you how to
course.
ride. It's fun.
Yeah. Oh, you can teach? You can teach too?
Well, when I said we,
You can teach how
so
to ride as
that
well?
means like the dealer. Yeah, they got courses down there.
Oh, okay.
So, it's like a
Okay, okay, okay.
3-day thing that teach you how to
Really?
ride on their motorcycles and get you a license. Yep.
Oh, wow. Okay.
It's easy.
I'm gonna take you up on that offer, sir. Okay. I
Just come
got
on
you. I
down. I'll
got
show
you.
you
Yeah, yeah,
around.
yeah. And I'll probably join
But thanks for having me on
your
board
riding
here, man.
band.
I'm excited.
Okay. I
Yeah.
got you. Man, I'm excited to have you. I'm excited to have you. I'd like you to just give us a brief I would say take on how Jesus has impacted your life as a person. And then we'll get straight to mortgages.
Well, Jesus has impacted my life as a person in so many ways. It's hard to, that's a hard question to like come up with a 20-second, 30-second answer. I mean, I'm 68 years old. So, I
All
mean, he's
right.
been affecting my
No,
life
say
since
it
I
as
was a
much as you
kid.
want.
I was raised in the church, my mom and dad, dressed us up in little suits and took us right into that church, when we were small. So I was raised in this church, but I think I started getting like a personal relationship with Jesus probably when I was about 48, like about 20 years ago. I
Yes.
always knew Jesus. I knew of him. I knew he was supposed to like make my life
Wow.
better, but I'm stubborn, So I think when I was about 48, I started to actually have a personal relationship, and my life's been really great ever since, So yeah,
Thank you so much for sharing
I
that.
talk to him
Yeah.
all the time.
All right. That's very good because, yeah, most people, there you go. Yeah, it's all about the relationship. Most people think it's just by going to church, but it's
Yeah.
not really about just going to church.
No,
That has to be a personal decision.
no, that's probably, I mean, the
So
church is
tell
important
us
because you get to hang out with other
in San
like-minded people,
Antonio,
but yeah.
facts, facts. So tell me, like in San Antonio, and if someone wants to get a loan, a mortgage loan specifically to get a home in 2025, can you give us a rundown how the person can go about it and what is involved, et cetera, et cetera?
Yeah. Well, it's pretty easy. First, you got to want to buy a house. So we work with a lot of people who are renting, right? And they're sick of renting.
Yeah.
So they call us up and they want to know how they can buy a house. And we talk to them and kind of give them the rundown of what, the main ingredients to moving forward. And really the most important thing is to get pre-approved, right? So like in the beginning, you want to buy a house, but you don't know what the payments are going to be. You don't know what the process is going to look like. You don't know anything, right? You're brand new at it, but you need to own one because we were raised basically to believe in the American dream, which is to own your own home and all that. So It's simple. They call up, we get them pre-approved, we have a conversation with them, we have them fill out an application, right? A loan application, and I can help them over the phone do that, or they can just go on my website and do that. They fill out the loan application. Once they're done, I get notified. And then we set up a time to go over that application so I understand exactly what they're trying to achieve so that they're on the same page with me.
Okay.
And then the next step is to take a peek at their credit. And then, we have another conversation and we, have them send in their documentation like W-2s, paycheck stubs, everything that they answer on the application. We send out like an email based on those answers to the questions we have. And then they send in the documents and we get them pre-approved. And then we set them up with a realtor if they don't have one. And the realtor will go out and show them houses, sometimes 3 houses, sometimes 30 houses, just to make sure we get the perfect one. They make an offer. And then the next thing you know, they're
Wow.
moving in. It's pretty simple. It's simple. It's not like
Interesting. Now, you said something about them you sending you the W-2 and all that tax thing. So what is going to make them
yeah.
not qualify? Can you clarify on that?
Well, maybe their credit's bad, like super bad. If that's the case, then we'll set them up on a credit
Okay.
repair program. If they finish it, that's great. They'll be able to buy a house. So you want you really want around a 620 score. That's and you want a higher
Okay.
score because the higher the score, the better the interest rates, right? But 620 is kind of a minimum. Okay, we have loans for less. If you got like a 5, I think we can go down to about 580. But that's that's a high rate, and they ask for a few more documents, which you may or may not have. But 620 is about the minimum that we like to work with, and so if your credit's not good, that could stop you. If you have a lot of jobs and like say you have like 7 or 8 jobs in the past 12 months, that could hinder you.
Wow.
They want to see some some stability. So, but that's
okay.
If you got a decent job, and even if you don't have that much money, we can do down payment assistance programs where these state agencies kick in your down payment and some of your closing costs. So we have people moving into homes with little to no money.
Really?
Yes.
So have you heard of this program called NACA?
Yes. I don't know. I'm not familiar with it, but yes, I've heard of it. But there's a ton of down payment assistance programs available. And so we use the ones that we are familiar with, and we can get like someone down payment assistance up to 4%, even 5%, then have the seller come in with maybe the rest of the closing costs, and they can move in for no money.
What
no
type
money
of
out of their
homes are we
pocket.
talking?
Like regular houses, like something I live in, like something you live in, like a house, like a
Really?
regular house. Yeah, I'm
So
doing
we're
one
talking
right now with
Go ahead.
I'm doing a home loan right now for a gal who called. She's renting $1,300 a month, right? It's kind of a lot. She's sick of renting. It's a lot of money. It's just going down the drain. So she was able to get down payment assistance, right? You can't make over $119,000 per year. The state gave her where we get the down payment assistance, they gave her a 4% down payment assistance. So that 4% that they gave her covered the down payment for an FHA loan. And then we had the seller come up with the rest of the closing costs. So she's moving in, and at the close of escrow, she's actually getting her deposit back.
No
The
way.
earnest money deposit. Yeah. So she's moving in with I think it cost her $600 for the appraisal, and she owns a house.
And how much is she going to be? She's going to be paying.
I want to say around with the taxes and insurance and the payment. The payment's like $1,400 a month, which is like a little bit more than her rent. But with the tax benefit, it's like less than rent. But when you consider the taxes and insurance, it's like around $2,300, I think.
Okay, interesting.
That's really good.
Wow, that is really
but no
good.
money.
With no money. Now, I don't know if you could clarify a rumor or a myth that I heard before for me. I heard that if in Texas, specifically in Texas, that if you have a relative buried on your property, that you will no longer be required to pay the property tax. Is that true?
I have no idea. I've never heard that.
You never heard that? Yeah,
I've never heard that.
Yeah, I heard that on some podcast that was talking about real estate investments. And they said in Texas, if you have a family member, they have to be related to you somehow through marriage or whatever. But if they pass away and you, instead of burying them in the cemetery, you bury them on the property on the side or whatever, that the state would cease to require you paying property tax. tax
Well, I
forever.
never heard that. But yeah, I mean, I'm
Okay.
gonna find out.
Yeah, please.
I I think
I was
I
like,
think
hmm,
if you call the Bear County Assessor's Office, you could probably ask
okay,
them that question.
okay,
But I'm gonna
okay.
write that down right now
Yeah, it was new
because
to me
I'm
too.
curious.
Yeah, I'm
Yeah,
telling you.
usually there's some kind of rules, like in the documents where you're purchasing a home. They don't want you to bury people. Maybe that's why.
You see that? There you go. So that's the loophole.
Yeah.
Okay, okay. So let me ask you this. How long has the mortgage lending landscape changed since the pandemic? And what long-term impacts do you expect during the, mortgage lending and stuff like that? How it impacts us, the consumer, would you say?
I don't really see a difference.
Really? So
Like,
what about the rates and stuff?
have you heard something that's like contrary to what I'm saying? Because I mean, I've been doing this during the
Hmm.
pandemic, before the pandemic, and after the pandemic, and it boils down to this: people want to buy a house or they want to refinance, and do you qualify or not? As far as the pandemic goes, if they weren't off work, right, and not being paid, that's kind of an issue. So
Okay.
there's some guidelines that address that, but I don't
Hmm.
really run into that scenario too much personally.
So the rates have not changed since the pandemic, or has it?
Well,
Has it?
rates go up, rates go down. I mean, a
Okay.
couple of years ago, the rates were a lot lower than, and a lot depends on the administration that's in power and so forth and so on, inflation, no inflation. So rates are, like a little higher right now, but they're trending down as
Okay.
we speak.
Right, right, right. Because of Trump, I suppose.
I don't know
And
why, but they're trending down. Inflation's becoming more manageable. Inflation's trending down. So when that happens, the rates trend down, and it's it's I think it's good. I don't think
okay.
personally, I don't have a crystal ball, but like a few years ago, you were in the 2% range, 3%,
Hmm.
interest rates, and I don't see that coming back soon. But
Really?
when I did my first loan many years ago, rates were
Hmm.
11%,
Oh, wow.
11, and they've been coming down ever since.
So what
So
are they now?
uh, I just priced out a loan for this, this down payment assistance deal. It's like 7.125. But that's like
Wow.
a down payment. That's down payment assistance. That's like
Right,
free
right,
money.
right.
Okay. And literally, because if you keep that loan for 3 years, you don't touch
Hmm.
that loan, you don't sell the house, you don't refinance, they forgive that down payment assistance
Wow.
100%. So it's like you bought a home literally for,
Basically for nothing. Yeah.
yeah,
Okay.
there's no lien ever again.
Really?
So yeah,
Okay. So what types of mortgage loans do you recommend most often and why?
it just depends, like remember back to the application. When we do the application, that's where you kind
Hmm.
of figure out what they need, or what they don't need. So
So
there's
the money
every
they're
loan
making
has
has a role.
every loan has a role. It's like a tool.
Okay. Okay.
There's so many different types of loans, like there's so many different types of screw heads. So depending upon the screw head,
Okay.
I'm going to pick a screwdriver that's going to fit that head, right? And I'm going to be
Right.
able to loosen it or tighten it. A loan's the same thing, it's the same deal. So do you need an FHA loan? Federal Housing Administration government loan. It's a great loan. It's a lot of first time home buyers use that product. They don't have to use that product. You don't have to be a first time home buyer to get that loan, but it's a great product
Can you talk a little bit
because you
about
don't
that
have to
one
have, yeah, you don't have, it's
for
three and a
people that
half
don't know it?
percent down. You
Okay.
don't have to have perfect credit. You can have high debt to income ratios. So you can have debt, I think they go up to like around 55%, something like that, of your
Wow.
income to
That's your
your
income.
debt. So
Right, right.
that's kind of high, right? So
Very.
where conventional financing is less, they're going to be less on the ratios. FHA loans, you have mortgage insurance for the life of that
Hmm.
loan, mostly to speak of. With the conventional financing, you don't. It can drop off after 7, 8 years, or when the property reaches 80% of the value of the loan. So it
Okay.
just depends, what kind
And
of,
can
and then you,
can you refinance with an FHA as well as the other one types of loans?
yeah, yeah, yep.
Okay. So for a first time home buyer, what loan programs or incentives should they be aware of? Like let them know, be a little bit more educated before coming to the table What would you say?
Well, you can always, Google first-time home buyers and so forth, but I like the
Okay.
FHA for first-time home buyers. And
Okay.
a lot of first-time home buyers don't have a lot of money saved,
Facts.
you know?
Facts.
So then you get into the down payment assistance arena, right?
Mm-hmm.
So we talk to them, and if they don't have any money, that's okay. They can still buy a house. They
Mm-hmm.
could buy like a $300,000 home if they qualify for the mortgage with no
Okay.
cash, because we get
Wow.
the realtor that we hook up with these people. They're
Mm-hmm.
very knowledgeable on getting the seller, and it's a buyer's market right now,
It
right?
is.
So yeah, so it was a
What makes it
seller's
so?
market not too long ago. Well, because rates were higher, right? And
Okay. Okay.
homes they're not like flying off the shelf like they were during the pandemic. During the pandemic, a year and a half, 2 years, 3 years ago,
Mm-hmm.
you would get a listing, realtor would get a listing, and it would be gone in like a day or two with multiple offers. With multiple offers.
Wow. So that was
Now you get a
slow.
listing. Now it's
Okay.
slow. Things are sitting around. So, you can go in there and ask for 10 grand in closing costs. You're getting a down payment assistance, right, from the state.
Yeah. Yeah.
So that's covering your down payment and a little bit of the closing costs, and you get the seller to pay for the rest of it. So you can move in and with no money. You just have to
Huh.
have decent credit. You got to have a 620 score at
Mm-hmm.
least to qualify for those, and a job that, a job that for 2 years, a 2-year job history. Not the
And what
same
type
job
of
necessarily, but a history.
which part of the credit bureau do you guys check? Because we have three. You have to check the whole combination.
Yeah,
TransUnion, Experian, and what's the other one?
Equifax.
Facts. So do you check all three and then average amount?
Yeah, that's a good
I,
question. So what happens is we use a credit bureau here at San
mm-hmm.
Antonio Mortgage calls Advantage Credit. We
Mm-hmm.
use them, and they
Shout out to
merge
them.
all three reports. They merge all three bureaus onto one report. So they'll take Equifax, Experian, TransUnion, and put it all on one report. So you'll
Okay.
have your scores for all three bureaus, and then all the trade lines on one report. And we don't average; we just take the middle score. So if you got like
Mm-hmm.
one score that's like a 750, and you got one score
Mm-hmm.
that's a 760, and you got one score that's a 720, we're not going
Mm-hmm.
to take the low one, which is the 720. We're not going to take the 760. We're going to use 750.
Why don't you take the high one though?
Hey, I'm a broker. I don't know. I don't make the rules.
I know, because that's what I'm gonna ask him. If I have a 760, why don't you take the 760? Why are you taking the
They
middle
just
one? But
I guess they feel like a more representative figure would be the middle one, not the low, not the
oh
high, but
man,
the middle one.
interesting. Wow, I did not know that. That's yeah. There you go.
And
Go
then
ahead.
so in that scenario, you're using 750, but the guy's married, let's say, okay, and we need his wife's
Uh-huh.
income, and she's got a 720 middle score. Then we got to
Uh-huh.
use her score. So we're going to use
No.
the lower middle score of the two
No.
parties. It's
Wow.
okay, man.
That's crazy. Like, wow, that's great information right there. That's
Yeah.
great information. People don't know that.
So I'm doing a
What?
loan right now. I'm getting
Uh-huh.
someone pre-approved right now
Uh-huh.
where the wife's got like a 720 score and he's like a 770, 777 actually,
Like, uh,
777. So we don't need her income. So
huh?
we're not going to put her on the loan
Okay,
because
okay,
he's going
okay.
to get a better rate just using his, right?
Absolutely.
She's going to be
Okay.
what's called a non-borrowing spouse. She's still going to be on the title,
Okay. Okay, okay, okay.
but not on the loan.
I was about to ask you, is it a must? Is it a requirement that the spouse must be on the mortgage title or loan or whatever? So it's
Just the
not
title in
just a title.
Texas,
In Texas, it's a must.
unless they sign some stuff. Yeah.
Okay, so let's say they have a
They're going to
prenup.
sign papers. They're going to sign papers.
Okay.
If they're married,
Uh-huh.
the two people are married, and
Uh-huh.
the one person, for whatever reason, the one person doesn't want to be on title, they're still
Uh-huh.
going to have to sign papers acknowledging the fact that they're not going to be on title
Got you. Got you.
because
Of
they're
course.
married, right, in Texas.
Right, right.
You can definitely not be on the loan, just be on title. So like the normal spouse, husband, wife, whatever,
Yeah. Is that an
they can
advantage?
just be on title. It
Is that
can
an
be because,
advantage?
like in that one scenario, the
Okay.
husband's at a 777 score, the wife's at a 720. I don't need her
Right,
income.
right,
So we
right,
just
right.
kind of we don't put her on the loan because a 720 score is going to have a lower rate,
Absolutely. Yeah.
you know,
Yeah.
than a 777. All rates are priced basically off of your score, your
Right.
credit score.
Okay.
Higher the
Okay.
score, less the risk, better the rate.
So they don't look at the income as much as they look at the credit score.
To get a rate, to get an
Yes,
interest
to
rate's
get a rate.
completely driven off of credit scores.
Wow. Okay. So where does income come in? How does
That
it
just comes
affect
into
you?
debt to that comes into
Okay.
debt to income. Do you have the income to pay back the loan?
Okay. So they check it out based on that.
They don't want
Okay.
you to have, like really, and think about it. They're going to let you have go up to 50% of your income towards housing and your
Mm-hmm.
debt, right?
Mm-hmm.
50%, that's kind of a lot, right?
Mm-hmm. Mm-hmm.
Because that doesn't include you want to go out and eat dinner. Maybe you want to, go out and take a vacation every now and then. Maybe you want to go out and, save some money so you have some money when you retire.
Mm-hmm.
Uh, I think 50 is kind of a lot. I'd rather see it at around 40,
Okay.
it's like ideal. Some of these people I work with, they got like a
Mm-hmm.
777 scores or like, professors in college and so forth and so
Okay.
on.
Okay.
Their
Okay.
debt to incomes are like 35, 36,
Right. Pretty
37.
low.
That's like low.
Yeah.
So they
Yeah.
can still have a life versus struggling
Right.
with a mortgage payment, and not have a life. I'd rather have a life and have a, lesser home than have a big full home,
I
and
got you. And burn it.
not
Right.
be able to go to buy a hamburger on a Friday night.
Right. I agree. But most of those people are not first time home buyers anyway. So they have experience in the game, basically, right?
Yeah.
So
Yeah.
okay. Okay, good to know. Good to know. So I was going to ask you, what are some of the most common mistakes borrowers make during the mortgage application process, and how can they avoid them? Or do you guys just fill the application for them and then they don't? It's hands free for them. How does that work?
I would say some of the big mistakes is people don't shop around. You should contact maybe 3 places. Go to your bank, see what they're at, call me, see where I'm at.
Okay.
Shop a little bit, right? You don't want to do it. You don't need to do it too much, but maybe 2 or 3 places. Make sure you're getting treated fairly. Don't
Why do you
when you're
say that?
shopping.
Elaborate.
Well, because you don't want to get ripped off. There's big differences in people's fees and rates. Like we're a mortgage broker, right? So we're able to
Mm-hmm.
shop various different lenders and so forth for the best rate. You
Mm-hmm.
go to your bank, they're typically a lot higher. The fees are higher. They got huge overheads.
Really?
So the rates are higher.
Aren't they supposed to
Yeah.
be lower as quote unquote bank? That's crazy.
Mortgage brokers like myself, we've saved people thousands of dollars because we don't have any overhead. Like
Really?
my rent's like, 1,000 a month, not
Right, right, right.
250,000 a month. And I got
Right.
like 50 branches across the state.
That's a
So
very good point.
I
That's a
got
very good
super
point.
low overhead, which, and I don't need to get rich on every deal. I don't pay a lot of people. There's, you saw on my website, there's like 3 or 4 people on the team. That's it.
Yes, sir.
Not
Yes,
like
sir.
30,000.
Right. Huh.
Right.
Interesting. There are brokers that have that many people, right?
Yeah. I mean, yeah, there's brokers bigger than me. I'm just a small brokerage shop in San Antonio. We don't have a lot of overhead, but the point is that's one mistake. Shop around a
Yeah.
little bit, do your due diligence, get pre-approved, get pre-approved,
By
and make
each
sure
of
you're,
the people that they
yeah,
shop around with?
no, just no, no, just one person. Find
Okay,
someone
just
that
one
you
person.
trust,
Okay.
find
Okay.
someone that you like and trust,
Okay.
and get pre-approved from them and make sure it's a pre-approval. Make sure they're asking you for the W-2s and paycheck stubs because basically all the work's done before you go buy a house. All
Okay.
the work's
Okay.
done beforehand. So when you buy the house moving forward, it's smooth sailing, right?
Right.
The
Right.
hard work's done up front.
So you're telling me that there's some people that don't get pre-approved and then the work becomes more tedious for them? Why
Well,
when they
they don't
start?
get a loan. Yeah. Like if they
Okay.
don't get pre-approved properly, then there's hiccups and issues where it could possibly even, kill the whole transaction and they
Wow.
spend money on appraisals and credit report fees and they don't even get the house that they're looking for because they can't qualify. So you want to get
No
pre-approved.
way.
You
Oh my
want to get
God.
pre-approved
Right.
100%. It happens all
How
the time.
really? I was gonna say, like, how can someone make that mistake to pay an appraisal before they get pre-approved? That's crazy.
And then there's a lot of lenders that don't know what they're doing. There's a lot of lenders like, that don't have the experience, right? And
Mm-hmm.
so if you
Mm-hmm.
call like a credit union, for instance, you're going to talk to some young kid who
Mm-hmm.
doesn't really know what's they take an application and then they pass it on to someone else who passes it on to someone else. Like when
Mm-hmm.
you call me, I'm
Hmm.
like an underwriter. I know what's going to work, what's not going to work. I can tell by
Facts.
the application and the questions when we review that application together over the phone. I
Hmm.
know what's going to work and what's not going to work. So I know what to ask you, right?
Hmm.
None of my transactions. I don't want to, I know this sounds bad, but I don't want to waste my time.
It
It's a
doesn't
lot of
sound bad.
work, and I don't want to waste the customer's time, the client's time.
Exactly.
We're going to get down
Exactly.
to business. We're going to figure
Straight
out
up.
what you qualify for. Give me the documents I need. And then you know for sure, for certain that,
Hmm.
once you start looking for a home, you're shopping with cash. You
Yes.
know that you can get a loan 100%. It's not even a
Yes.
question.
Yes. Interesting, man. That's crazy to me to hear that you say that as a common mistake. Okay. Um. Wow. Okay.
Common.
Very common. So, how do you determine the best loan option for a borrower's unique financial solution? Is there a way
Well,
to determine
yeah.
that?
Yeah,
Okay.
it's called credit and assets. So if you got like an 800 credit score,
Hmm.
and you got like, $100,000 to work with, we're probably
Okay.
not going to have to go with FHA, right? We're going to probably put more money down. We're going to go with a conventional loan. There's not going to be any mortgage insurance. That's probably going to be a better option for you, right?
Okay.
If on the application, if you have no money, I'm going to ask, hey, off the record, what are you thinking for a down payment closing cost? Well, we don't have any. Okay, so, where are you going to get the money? Well, I'm not sure. Well, what if you were sure? What if you were sure? Where's the money going to come? Well, probably can save it. Okay. So then that you're going to pivot over to a down payment assistance thing, or
Okay.
maybe they
Okay.
got an uncle or an aunt or a mom or a dad or a cousin that can help them financially with the down payment. Again, based on just a few simple observations, it's easy to
Yes.
pivot from, hey, we're going to go here, now we're going to go there, we're going up, down, It's pretty simple if you
Yes.
know how to play the game.
Yes. And I
And
was
if you've
going to
been
ask
doing
you,
it a long time, you're going to know.
based on that, I was going to ask you a relative question to that. So, on a scale of 1 to 10, how often do you decline versus approve a borrower? More often
It's
than not,
just,
obviously.
yeah, yeah. I mean, it's not because of them. It's not
I
because
know.
of
I know.
me. A lot of them don't want to complete the process. If there's any hiccups,
Really
a lot of people, man, they just don't want to do the work. I'm sorry to say, but they don't want to like
interesting.
do the work. You see people people say, I don't really go off of what people tell me. I go off what people do,
Hmm.
what people show, right? I think that's kind of,
Explain that though. What do you mean they don't want to complete the work? Like
well,
you
if
give
they
them
got
what's
some
the
credit issues, if they got
okay?
some
Okay.
credit issues, for instance, I can lead them to water, but I can't force them to
Nope.
drink,
No, you can't.
right?
It's true.
I'm
Yeah.
not a credit repair expert. I'm a loan officer, but I know people in that credit repair game.
Right.
But unfortunately, it costs money, right? I wish it was
Facts.
free, but it's
Facts.
not. So if they have the money to help themselves out, then we can get them fixed up. And within a year, they can have good credit. But if they don't do anything, they're never going to have good credit. And it's always going to be a problem. I mean, you can get a loan to buy a car, 25, 30% at some of these little lots around San Antonio because you got poor credit and et cetera, et cetera.
One
If you
thousand
just
percent.
took the time to get it fixed, even if it took a year, you'd have yourself 750 credit scores and you'd be getting the
Facts.
best rates possible, But if you
Facts
don't
to the
complete,
bones.
if you don't, someone can tell you like, hey, do this, do this. But if you don't do it,
Exactly. What are you
then
willing
you're
to
going to
do? Come
continue
and
to
hold your
crash.
hand and make you
Yeah.
right? Do nah. Okay. I see what you. Wow.
You know
You
what I
see.
mean though, right?
I know what you mean. I know what you mean. That's crazy though. You think it's just people just being denied for nothing, but they don't want to do the rest of the work to get approved because
That's
maybe
generally
they
what
want it
it
now.
is. That's generally
Interesting.
what it is. Credit.
You see, this is why we have to talk to the professionals that actually deal with people every day when it comes to these kind of things because they'll tell you exactly what's going on. And our
Yeah.
assumption from behind, we think, yeah, they just got denied. They're not going to get approved. But maybe they provided them with some solutions that they're not even willing to, you
Yeah.
know, embark on. Wow.
Yeah.
Okay.
It's super.
Okay.
It's just like 1 + 2,
Hmm.
equals 3. It's do this, do that, and you're going to own a home. 100%. of the time. There's a lot of homeowners out there. You're thinking, how'd they get a home? But
Right.
they just went through the process and did what they were told, and now they own a home.
Now, are you privy to giving us, if not, it's okay, I'll respect that, but I'm saying, you mentioned some financial aid programs, I guess. What did he call it?
Credit
Down payment
repair?
assistance
Oh yeah.
programs. Are there any that you can recommend, or you're not privy to that, to give us that information? It's okay if you're not.
Yeah, I
It's
mean,
just,
just call me up. There's a bunch of them.
okay,
Just call me
I
up, and
got you. I got
I
you.
like using like a couple, but
Okay,
because they're
no
easy to
worries.
work with. A lot of them are tough. You got to do this, and I like easy. I like
Right, simple
smooth
is
and
the game.
easy.
Yeah,
Yeah, simple is good. So, but there's a
guys, you
lot of
heard it.
them available.
Guys, you heard him. You can call David. Now let's go to the next question. We're almost done, David. Thank you so much for this wonderful information. Besides credit score and income, what are the financial factors would you say lenders scrutinize when approving a mortgage? Or those are the only two that they scrutinize,
Those
you
are the
know?
two. Those are the two big ones:
Okay,
credit, debt, income,
okay.
assets. They don't
What
like
about bankruptcy?
sudden bankruptcy. Well, yeah,
Bankruptcy.
that's credit,
Okay, that's credit. Okay. What
but
about
yeah,
judgment?
they don't like that stuff too much.
What about a
Charge-offs,
judgment?
collection
Uh,
accounts.
okay,
That all depends, based on the program you pick. They
okay.
look at that differently depending upon if it's FHA, VA, conventional. Everything's kind of unique, right? But
Hmm.
bankruptcy is an issue,
Wow.
foreclosure's an issue, but
What about
it's,
tax liens?
tax liens are an issue
Wow. Okay. I'm not surprised that not much about tax liens though. So
because the
how do they
government can
resolve it?
take your house. You got to come up with a payment plan with the government, like on a tax
Okay.
lien.
Okay. On the tax lien. Okay. So that
Yeah,
one,
and
does
then
it
on
have
a
a number of
foreclosure.
years before it goes out of your record or something like that? How does that work?
When it's paid off,
Okay.
then it goes off your record.
Okay.
Usually, a lot of times the tax liens,
Uh-huh.
they don't go on your credit report. You don't even know someone's making payments to the IRS unless they look on a bank statement. Like the underwriter might look on a bank statement and go, "Hey, what's this IRS payment of $300?" And then they want to know what that is, right? And then, well, that's a tax lien. Okay, well, now they want to see the agreement with the IRS and they want a
For
history.
real.
So yeah, so
For the
so me as a loan
$300?
op, well, you want to look through as a loan officer, you want to look through the bank statements that they give you to like see like, okay, is there anything weird in here, that's going to get
Right,
caught
right, right.
by an under because they will for sure catch it.
I can't believe that something like this, a
Foreclosures,
small thing.
for
Foreclosures.
foreclosures,
Okay.
you're looking at I think like a couple of years. You can get a house again.
So a couple like 2 years. A couple of years, you
Yeah,
mean like 2 years? Or you say
yeah.
more, a little bit more?
Yeah, I mean, it just depends on the program. So it's like between 2 to 4 years for bankruptcies and foreclosures, depending upon the programs.
Okay.
So
I'm
every
going to ask
program's
you a
kind of
very
unique.
okay. I'm going to ask you a very trending question, and give me an honest opinion on that. How does technology like AI and digital mortgage platforms change the way people apply for and secure mortgages? What would you say?
I don't know. It hasn't really changed the way I do business yet
Okay.
because
Okay.
I'm like, okay, I'm just now starting to mess around with AI a little bit.
Okay.
Like just recently, I
Uh huh.
have like on my computer right here, there's like, Microsoft AI that I can open up. And sometimes I actually write like ads with it. I can
Very
mess
good.
around with it
Yes.
like that. But
Yes.
as far as,
Yes.
I mean, I have a friend who is big into it and he loves it, but I don't know. I just don't know.
You're
I'm
old
a,
school.
I'm an old soul, man. It's like,
Also,
what's this
yeah, I
AI
hear you.
stuff?
I hear you. I was actually discussing with a friend of mine that feels the same way. He doesn't like AI. He feels, and he's a software engineer. He's like, man, I don't know, man. I remember watching Terminator and stuff like that. He's like, I
Yeah.
don't know, man. I don't like it. I can't believe he doesn't like it because he's in tech. He's in tech, man. That's his
A
field. Like,
lot of people think it's not good. I mean, I don't know. Some of these tech
yeah.
guys even say it's kind of like robots.
He's gonna take. He
I don't
told me he's
know.
gonna take their jobs.
Could.
Yeah. So I mean, he has to like it. I told him you gotta find a way to like it to monetize it because otherwise, what is your
Yeah.
other option? What's the alternative?
It's coming. It's coming. It's happening.
Inevitable.
So it's
Inevitable. Okay.
inevitable.
All right. Okay. Good to know that it hasn't changed much. So even in terms of fulfillment, do you think it has any effect whatsoever in the future? Do you think it's going to, like AI
What,
with
AI?
mortgage? Yeah, with mortgages.
Yeah, well, there's already a bunch of tech involved. I mean, I
Okay.
can close a loan in like 2 weeks,
Okay.
you
And
know?
usually it's
So
not that long, or it's longer.
at the banks, it's like 30 to 60 days. But as a
Wow.
broker, with the wholesale lenders I work with that are all tech savvy and stuff,
Huh?
it's quick. It's
Oh wow.
fast. Once you get rolling, like once we take the application, I get all the documentation, I get them pre-approved. Once they find a house, I submit it to the lender, we disclose and appraisals. Everything's done online. There's hardly any phone calls, except I talk with my
Wow.
customers,
Yeah.
but
Yeah.
I don't have to call the appraiser anymore. I don't, everything's like online and it's fast. So
So
it's
what
already kind
delays
of
it
out there.
to 2 weeks? Would you say is it like them providing the information that you need?
Yeah.
Okay, okay,
Yep.
okay. So if they provided all the information per se, like 3 days, it could be closed in 3 days with the tech that you have available. Would you say yes or no?
Yeah, like after you get all the information and
Yeah,
after you got the appraisal and after you got the
yeah.
title work in, and yeah, then you're clear to close. It's called clear to close, and then you're looking at 24 hours before you can close. After you got it
Oh,
clear to close, it's like 24 hours.
so the appraisal, does it take long?
No, it
No.
used
Okay.
to when everybody
Uh-huh.
was super busy, and
Uh-huh.
rates were like 2-3%. It was
Uh-huh.
busier, but now you can get an appraisal back in like about a week.
Okay, okay, okay.
But some of
Wow.
the big banks are still I don't know, they're like slow compared to
Right.
mortgage brokers. Speed is everything. Speed is everything
In this industry,
in a transaction because you can
in
go
the
to like
transaction.
make
Okay.
an offer. You can make an offer and everybody else is like making an offer for 30, 45 days. And I can tell my customer, make an offer for 20 days.
Oh, wow.
The seller's going to see my offer
Huh?
and look, well, this one's 30, this one's 45. This guy wants to close in 22 days. He's going to go with that one because it's like he's going to get his money faster. So technology is great and it's going to get better and better. So I wouldn't be surprised if you can start seeing like even, 2 weeks would be the norm.
Wow. Okay, so man, that's great. Great to know. Great to know. So when does it make sense for this is another good question, I think, but you tell me, when does it make sense for homeowners to consider refinancing and what should they weigh in first before making that
Yeah,
decision?
great question. So obviously rates right now are like 6%,
Okay.
or more, depending upon, high fives to mid sixes, depending upon your credit score.
Right.
Cash out. Okay. You need money. What do you need the money for? Do you want to take a vacation? That's not going to be good, probably. Maybe it is.
So not a good
But
reason is what you're saying. Okay.
there's a lot of debt going on right now. A lot of people are in debt, like up to
Whew.
here. Okay. Here. There's more debt in the United States right now than in many, many, many
Facts.
years. It's trillions and trillions, and people are using their credit cards to finance groceries. I
Oh,
mean,
they
it's the
paid back
truth.
or damn, man, that's
So
crazy.
about 48% of all the loans being entered into the system right now are refinances, believe it or
Really?
not.
A lot of
Because
people are
yeah,
refinancing.
a lot of people, about almost 50% is refinancing right now, even though the rates are higher. And people, you can take a cash out deal. And I got
Uh-huh.
charts and graphs and I enter all the information. So if you call me on a cash out refi, I'm going to
Uh-huh.
enter all the information into some programs I have. And then I'm going to send you basically a chart, right? And some
Uh-huh.
graphs on what this refi might look like for you. And we can
Okay.
talk about it. In many cases, it's going to make sense. Let's just
Okay.
say you have like $40,000 in credit card debt and you got a car payment too on top of that. But there's a lot of equity right now as well, right? Tons of
Uh-huh.
equity. There's a lot of credit card debt, but there's a lot of home equity.
Uh-huh.
You can take a 3% mortgage, right? Pay off a bunch of your credit cards and maybe include one of your cars, right?
Uh-huh.
And get a 6% new mortgage, right? Let's say you have 25 years left. You've
Uh-huh.
had the loan for 5 years. You got 25 years left. So we do a 25-year loan. We pay off all your debt. We take you from a
Uh-huh.
3% mortgage to a 6% mortgage, but you're still saving $500 a month
Okay. How? Wow, that's
because you're
crazy.
paying off all your debt. You're paying off all
Okay,
your
okay, okay,
credit
okay, okay.
cards. You're paying off your car. You're saving
Okay,
500 a
okay. I
month.
see what you mean.
Okay.
I see what you
I'm
mean.
not
Okay.
raising, I'm not taking you back to a 30-year loan. You're going to go with
Uh-huh.
a 25-year loan. Now, if you're disciplined, you can take that $500 a month that I'm saving you,
Mm-hmm.
follow me, and
Mm-hmm.
apply that towards your mortgage as an extra principal payment.
Mm-hmm.
Now you're taking a 25-year loan and reducing it down to about a 15-year loan, improving your net overall worth by thousands and thousands of dollars, right?
Wow.
Because you're not paying all that interest. So it's interesting because a lot of people say, well, I got a 3% mortgage, well, okay, so how you doing? How you feeling?
You have another $40,000 in credit card debt. But yeah, I
3%
got a
means
3%.
nothing.
Right.
Okay. It means
Interesting.
nothing. If you got 40,000, 20,000, whatever it is,
Right.
you're like living check to check to check. Why not free up some of that money, right?
Fact.
Do a cash out refi, include all that debt, do like I said, let's say you got 23 years left on your loan. You've had that loan for 7 years. You got 23 years left. Do a 23-year loan, go from a 3% to a 6%, pay off everything. You're saving $400 a month, $300 a month.
Facts.
Take that $300 a month, apply it towards the principal every month. Now you take your 23-year loan and you got like 11 years left. It's all in black and white, It's just numbers.
Interesting. Okay. Wow.
But the
Okay.
point is you want to be debt free and you don't want to go back into debt. So there's a bit of discipline in this. And I always have a talk with these
100%.
people because if they do this and they go back into debt, it's a big waste of money.
It is. It is. Because most of them would, I bet, when they see that free money. It's kind of a habit.
It depends. Some don't, some do. Some don't,
Yeah.
some don't, But
So based on what you're saying, you prefer people pay. Okay, so let's say if someone gets in their hands on a lump sum, would you advise them to pay off their mortgage, or would you advise them to do something else with it?
I would say get a financial planner, and ask them. I'm a mortgage guy. I kind of feel like you're always going to have housing payment because if you don't own a home, you're going to rent somewhere.
Okay. Okay. Yeah, because I did watch a. Go ahead.
I'm a proponent in having a financial planner because I have one, and
Okay.
I mean they're good. They're really, really good. They've helped me. With all the turbulence going on right now, it's
Yes.
I mean, it's just basically the market goes up, the market goes down. But over time, it's a very good thing to be into the market. So my wife, she's kind of like, well, we should pay off the house. I go, well, I don't know, but the financial planner says no.
I see. Okay.
Because you're always going to have you're always going to have rent.
Yes. That's what I saw. The video I saw of the guy talking about it. That's why I asked you, because he brought a cup of water, a glass of water, and an empty cup, and he was explaining it and saying he doesn't recommend you paying it off. Use that cash to do something, investing or whatever, to generate
but
more
some people basically want to do that, but I don't know. It's kind of up to the people.
It's up to them. Yeah, I see what you mean. Yeah, it just varies on the sense. Okay.
Yeah.
So what about student loans and car payments and all the debts? And how do they impact eligibility and how borrowers
student loans do.
Okay. Oh wow, student loans do.
Yeah.
It's like it's added to the income debt ratio type part of the application.
Right. And conventional loans calculated differently than FHA loans, and FHA loans calculated different than VA loans. So everybody has a little different take on how to calculate student loan debt, right? Even if it's deferred. It used to be where if it was deferred, they wouldn't count it at all. But now, it basically sometimes, like maybe the wife has a lot of student loan debt and you don't really need her income. So you might not want to include her in the loan. Again, everything has to be analyzed.
Customized, big time.
And customized.
Okay.
And you're going to get pre-approved. So when you go out looking for a home, you're not going to get, I'm sorry, but we're not going to be able to do this because of this, and it happens all the time. That's why it's super important to get pre-approved by a reputable place before you take one look at a house, like you get in your car and start driving around.
Right. Okay. Now people know about, now they know. So what about in competitive housing markets? What strategies do you recommend for buyers to strengthen the mortgage approval and offer? Is there a strategy?
I like the fact, like the competitive market. Right now it's a buyer's market, but there's certain properties that, you might have multiple offers on. You just want to be pre-approved, like not qualified, that's where I just talk to you over the phone. You send me nothing. But yeah, based on what he's telling me, he's pre-qualified. Get pre-approved, and do a short escrow. Remember we talked about that, like a 22-day escrow. That's
Yeah.
going to look a lot better than a 30 or a 45 or maybe even a 60-day escrow, and be ready to go.
Okay. Wow. Okay. Good to know. And how can borrowers ensure they're working with a trustworthy lender, and what questions should they ask to avoid predatory lending practices? Just like you said, there are people that'll take advantage of you. So what's some questions they could ask, and how can they verify if the person is trustworthy, the lender?
Well, you got to go. Basically, today you look at the reviews, right? You look
Uh-huh.
at reviews and go off that. Amazon kind of started that deal with the reviews. I
Yep.
don't buy anything on Amazon if they got bad
Without.
reviews. Nothing. There's no way. So here at San Antonio Mortgage, we got a 4.9 review, average, and it's
Wow.
good. We got great reviews, and if they don't got reviews,
Stay
I don't
away.
know. I
So
don't.
how
I mean, I'm just.
I'm thinking, how does a new mortgage lender play in the game then? Because you want them to fake reviews. They can be good, but they just don't have reviews. How
Well, a
they
new
so they
mortgage
should.
lender probably is not going to have their own company like we do, but I
Oh,
don't
okay,
know. You
okay,
just you
okay,
gotta get everything in writing. We talk to someone over the phone. You talk to
okay,
someone over the phone. You really don't know them. You maybe want to meet them in person. That's fine. Most of my business is over the phone, but
okay.
we can do a Zoom together. We can meet at my office if they want. There's just
Facts.
whatever they want to do. And then we got reviews online that says we're good people. We're trustworthy and so
Right,
forth and
right,
so
for
on.
sure. That helps a lot. Okay, we've come to the end. So now I want you to give us a piece of advice. This is how we end our podcast. Before you give us a final word of encouragement, give me two pieces of advice that you would tell your younger self. One is something you want them to do, or something you're advising them do this, and two, something you advise them not to do this at all, ever. What would those two advices be to your younger self?
Buy a house as soon as possible.
Wow.
Yeah, buy a house.
Okay.
Is that what
Wow.
you're talking about,
Why?
like business wise
No, no,
or just in general?
anything wise, just anything at all.
Oh,
But okay.
oh,
Well, buying a house, that's a good one. You got to explain that though.
yeah, buy a house. As far as like you're like a young adult, buy a house as fast as possible. But just in general,
Huh?
get a good education, man. Go to school. You're
Okay.
only young once, right? So
Huh?
basically, listen to your parents. Get a good relationship with God. Get good mentors. Find a good church, and
Okay.
don't screw that up. Don't get, and then the don't stuff. Don't get involved in drugs. Don't drink and all that stuff. Just be a straight shooter.
But why would you advise them to buy a house fast? Is there a benefit to it? Okay.
Yeah, because like you're gonna develop your own wealth right now. If you're paying 1,400 a month, let's just pretend you're paying 1,000 a month, which is probably like not that much. In
No,
reality, it's probably more like
no, it's not.
1,500 plus. Let's
Yeah.
just say 1,000. That money is like basically you might as well just take $1,000, crumple it up, and throw it in the trash can because you're helping someone else,
Facts.
with and their family,
Facts.
but you
Okay,
might as well
okay.
help your own,
It
even if
might
it's
as well
not
help
your
you out.
dream house. You gotta start somewhere. And like I
Right.
hear people say, "Oh my God, I 250. What can I buy for 250 or 180?" Right? I'm thinking, well, it's better than renting. It's better than renting. You got to start somewhere.
Okay. Interesting. Okay.
Buy
So
a house.
buy a house as fast as you can. Guys, you're listening.
Yeah,
So give us one final word of encouragement, whatever it is. It doesn't have to be mortgage related, but whatever advice you feel like you can give to encourage our listeners in life, go ahead. Shoot.
have fun, work hard, and have fun. And when you get yourself, when your head starts spinning, all you got to do is this: look up and smile, and all that spinach will go right away. It'll go away quickly. Do you know what I'm talking about?
No,
Have
no,
you ever tried
elaborate,
that?
elaborate. No.
No, just try it now. Like the stuff that sometimes things bother you.
Yes, yes,
All
yes.
you gotta do is look up and smile,
Interesting.
and
Interesting.
it all goes away. If you can remember that,
Interesting. Yeah.
remember to remember, look up and smile.
Look up and smile. Wow. Okay.
I don't know what the deal is. I think you're looking to the heavens. I mean,
Yeah,
I
yeah,
don't
yeah.
know. It works good. It works wonderfully. That's my
Oh,
advice.
okay. Wow. Thank you so much, Mr. Lindsay. And David, you're the man. Thank you so much for coming on the pod. And by the way, in the near future, we're going to invite you back, okay? Because I know you have a lot of wisdom to share. But in the meantime, thank you so much for coming on the pod. We really appreciate you. Guys, you've heard it from the man himself. So tell us, David, how can we contact you if someone is in need of a loan and all that good stuff? How do they do that?
Yeah, just call me at 800-674-1474, 800-674-1474, or just Google San Antonio Mortgage, and my website will come up. And yeah, either way, we'll be in touch, and we'll teach you how to own a home quicker than later.
And you do deals anywhere outside of San Antonio within Texas?
I can go, yeah, the whole state of Texas and California. We're licensed there as well. So
Wow.
if you
Okay.
have
Guys, you
know
hear that?
people there, we can go there. Yep.
Guys, you heard that now. Yeah. Okay. Well, thank you so much again, Mr. David. You have
We'll
yourself
see
a
you at the
wonderful
Harley
day.
dealer, right? We're going to see you at the Harley
Yes, I'm
Davidson
definitely going
dealer.
to plan on it, and then I will shoot you. And now I have your number. The call you gave me today was your number, right? I'm going to save it.
Yeah, yeah.
Okay,
Yep.
because that's my direct line as well. So I'll have your number, and then when I'm ready, I'll definitely, you best believe I'm reaching out to you on that. But yeah,
Okay.
guys, thank you for tuning in to the Akudo Experience.
Thank
This
you
is
for
Ray
having me.
Akudo. Thank you, sir. And we'll see you guys in the next one. Ciao, ciao.
Thank
Bye-bye.
you. Bye.